On today's Hot Sheet, I'm discussing what the latest mortgage data tells us about 26 home sales, autumn discounts at their highest level since 2019, and down payments, which are leveling off per a new report. Today is Tuesday, October 21, 2025. I am Byron Lazine, and the Hot Sheet starts now. Frank, thank you for the comments saying I was muted. So awkward little transition as I mentioned what we'd be covering today. I'll mention it again here on the top of the show. Latest mortgage data on the 2026 home sales. What it tells us about 26 home sales, autumn discounts at their highest level since 2019, and down payments, which are leveling off per a new report. So welcome into the Hot Sheet live from the Montage here in Deer Valley, Park City. Where I am at 7:30 a.m. local time. Let me know in the chat which market you're tuning in from, wherever you may be. Thank you for joining us. If you just joined me over at the BAMX Roleplay Mastermind for BAMX members, thank you for joining me on back-to-back sessions here. You can get into those Roleplay Masterminds exclusively for BAMX members by going to school.com/BAMX. Jump into the community, try it for free, and I'll try it for free for the next 7 days, and I'll see you guys in there. All right, Shelly, you are more than welcome. It's my pleasure and my honor to be doing this here with you today and every day that the markets are open, Monday through Thursday. All right, we've got some data now out on what the mortgage data is telling us about 2026 home sales. Haley's helping me out on the back end here. Haley, if you can go right to expensive and cheap. Okay, expensive and cheap. This slide's available for you. All my Compass fans, you guys would appreciate this slide. This is now with the former Alto or the Altos founder, moving on from Housing Wire over to Compass. I mean, the data that Compass has coming out from their chief economy officer, it's outstanding. This is one of those examples of that. So, BAMX members can find this obviously in the slides for the Hot Sheet. Use this as you wish. But nearly the punchline here is nearly 20% of all mortgages have greater than a 6% interest rate. Okay, really interesting that this number has now climbed up to over 20%, being over 6%. Okay, now. There are as many mortgage holders with rates over 6% as there are under 3%. So there's still, you could see, this has only been something we've been accustomed to seeing here the last 4 or 5 years, where you have 20% of mortgage holders with an interest rate under 3%. That's a 20% group that's going to be really slow to getting that property onto the market. Doesn't mean that they're not going to buy another property and go live there. But hey, if I got under 3%, it is a tough ask to say, go and sell that home. I may want to keep it and rent it. Now that number has come down since 22, since the peak. That number has come down slightly. It's over 20%. But it's come down slightly. As you see where time wears on, some people are going to make this decision. But the number I think that's more encouraging about 2026 is that first number. 20% of mortgages have an interest rate over 6%. If we go back to 2021, 2022, this number was under 10%. Obviously, not many people at all had an interest rate over 6%. Anyone that's got an interest rate over 6%, as rates move to the low sixes where they are today or into the fives, it becomes an option to move on from that home. Certainly becomes an option in a conversation for those 7.5 and above to start thinking about refinances. So good for mortgage LOs. Okay. Here's the other thing people are doing right now. Paying off their mortgages very quickly. So the 20% in the 6% category tells me, okay, we could be getting into a place in 2026 where we see more movement in the home market. Damian Neal, CEO of Realtor.com, kicked off uh, this session here that we're in Park City for last night by talking about 3+ years of 4 million existing home sales, the slow grind of existing home sales, how hard the market has been for real estate professionals, particularly over the last 3 years of a real estate recession as it relates to affordability and as it relates to the numbers of transactions. What are some signals that could, some signs that could tell us that, hey, we're going to see some movement in 2026, that transactions are going to move up? Well, another one of those signs outside of the 20% category with a rate up over 6% is this one. The mortgage rates that are being paid off very quickly, that the equity that is built up very quickly. Haley, if you can go to that. Current loan to value ratio for outstanding mortgages is only 44%. Okay. 41% of homeowners are free and clear. Okay. When you look at the mortgage holders, 55.8% of outstanding mortgages have, are 55.8% equity in their home. The average American homeowner has almost 56% equity on the loan to value ratio. Now, obviously, if all these homes came on the market at the same time, we know, especially in higher inventory markets, there's downward pressure. Everything is price, supply and demand sensitive. So these equity gains are not just rising, though, from home prices. In many parts of the country, home prices are lower than they were a year ago. When think about the Sunbelt states and these higher inventory locations. So home prices, they're up 1% to 2% for the year. But one of the reasons we're gaining equity is people are paying off these loans at a higher rate. The equity gains are happening because, hey, I'm just going to go ahead and pay off this loan and get the thing cleared out. Okay. Go to the mortgage lock-in one. This is another interesting way to look at maybe what might be coming in 2026. So we're familiar with the mortgage lock-in, homeowners, holding on to these ultra low rates. It's obviously unappealing to hold on or to, get rid of a really low rate for a high rate unless you have a reason to do that. Okay. So the outstanding rate, as it's ticked up here over the last, number of years, higher rates start to cure the lock-in as the outstanding rate continues to climb. Okay. The outstanding rate is the combination of the average interest rate for all outstanding mortgages. Okay. So that outstanding rate has started to move up as new mortgages have been introduced into the market the last 3+ years. Okay. Now, as that has happened, what we've seen lately and expect to see into 2026 is that purple line, that top line, the market rate continue to move down. In fact, on this chart, it's showing it higher than where it is today. As we get closer to 6% and that over outstanding rate continues to climb where it is now up over 4%, that gap starts to close. It's often why I talk about 5.5% being a very sweet spot, I believe. We'll see when we get there. 5.5% would be a sweet spot in this market because the outstanding rates right now are sitting at 4.25. What's the exact number? By next month, Americans will have the same mortgage rate average, 4.4%, 4.4% on outstanding, as they did in Q1 2020. So before it all started, before the panty took off, 4.4% was the outstanding mortgage rate. We're back there. Now, market rate much higher. So there's consideration. But as that goes to 5.5%, if you're talking 4.4 on outstanding versus 5.5, if we get there and there's belief, I'm going to be talking to Danielle Hale, Realtor.com chief economist today. She'll actually be doing a session here tomorrow morning before I take off and go to Denver. You should come see me in Denver Friday, Fusion Rally. If you missed any of my other keynotes this fall, check me out over there if you're in the area. But Danielle Hale I'm going to be talking to her about the rates, certainly, because she believes we're going to get down to low six. She believes we could get under six next year. There's many other. Barry Habib thinks we can get to that 5.5. Is there a chance that we get to 5.5 next year? Because if there is, that gap becomes small enough to really offer up some movement into the market. That's what I'm hoping for. That's what I'm looking for. We'll continue to be tracking that right here on the hot sheet each and every single week as we get closer to hopefully 5.5% rates. The 10-year today is looking good. Haley, bring up the 10-year. Let's do it early in this hot sheet session. If you've got it available, pop it up on the screen. But I saw a year-to-date low today as I was looking at the 10-year, and I think that's exactly where we're at. 3.955 is a go to year-to-date. There you go. That we're a year-to-date low on the 10-year, 3.955. Treasury yields are sitting under 4% on the 10 years, a good place to be for mortgage rates. Obviously, investors will continue to monitor this government shutdown. We've got a Fed meeting next week, and we'll be looking at both of those. But look, 10 years in a really good spot. If spreads continue to improve, this could create a possibility where that 5.5% becomes a reality. Okay, home buyers right now. I put out on IG. I think it was on IG. Haley, you can correct me if I put it somewhere else. But I put it on IG recently. One of the worst questions that we can ask. It was maybe even yesterday. Agents answer the question of like, "Hey, when's the best time for me to sell my house?" Some agents brutally butcher this question. Well, it's a great time to sell, and it sounds like a realtor talk track. It sounds like a caricature of somebody when they do that. It sounds ridiculous. It sounds ludicrous. Anybody asking that question understands that out of a 365-day calendar, every single day can't be the greatest time of all time to sell. It's just like not possible. It's mathematically inaccurate. So when the best time to sell, obviously we know as professionals that really comes down to, leading into some clarifying questions. Are we looking to hit a timeline? What would that timeline look like? Are we looking to just simply time's not a factor and we're looking to simply just net the most money possible? Are we looking to match a sale with a purchase? There's all these different clarifying questions that and then local market dynamics. Everybody here knows your local market dynamics better than anybody else that factor into that conversation. But historically, generally speaking, as we look at the macro, and this is true for most markets, right now through the holiday season is a pretty damn good time to buy. On the macro, we looked at it yesterday. And so if you missed yesterday, you can go to the replay available, obviously here on YouTube, but also Spotify and Apple. Love for you to consider leaving us a review on the audio platform for the hot sheet. I know many of you guys listen to the audio on the replay. Thank you for doing that. But when we looked at it yesterday, we're in the seasonal decline on inventory, and we know that's going to continue over the next couple months. So, okay, there's less options, but there's also an evaporation of buyers during this time. People don't want to buy leading into the winter, leading into the holidays. They want to do it and everybody else does it. They want to do it in the spring. That's one kind of the herd mentality, and everybody else is doing it. Then they believe that spring buyers, that's when they're supposed to be getting out there. And two, there's the real life obvious of don't want the disruption in having to move in the holidays. And so the home buyers that are out there right now are actually scoring some of the biggest deals we've seen since 2019. Haley, if we can go to the first one in school, if you can bring up that first chart. Why is this? Well, homes are sitting on the market that sit on the market. They often sell under list price, right? So median days on market right now is 50. Okay, well, that's the highest we've seen. In fact, it's higher than going all the way back to 2019. So the homes that are sitting on the market longer and that are still on the market today, home buyers are getting a bit better deal on that. Share of homes sold above final list price, 2025, we're at 25.3%. Okay, 1 out of 4 homes selling above list price. That's the lowest number we've seen since 2019, slightly above 2019 levels, but certainly the lowest number that we've seen here in recent memories. The typical home that sold last month went for, and this is the month of September. Okay, so this is a Redfin report going back to covering September, which was it last month, of course. The typical home that sold last month went for 1.4% less than its final list price. Okay, that's the biggest September discount in 6 years. Okay, so buyers who are asking the question, when's the right time to buy? The momentum in the data tells us now. Be active in the market now. That trend from September likely continues throughout the seasonal decline. Best time to sell. Okay, that gets into a whole nother set of clarifying questions, like we discussed. If it's simply net money, which for a lot of sellers it's not. A lot of sellers, it's matching it up with the buy. Okay, well, right now it's the best time to probably buy. These next 3 months that it will be over the next 12. So you have to factor that in if you're buying. Obviously, do you want to hit a certain timeline for a job or a school or whatever? Well, that factors into the equation. And so, that conversation on the sell side becomes a variety of different clarifying questions, as it does on the buy side. But if we're talking about money, which some people focus their conversation on that, how do I get the best deal? How do I get the best deal? Here are the data points that you can look at to at least provide a scenario that offers up strategy on when the best time to buy, when the best time to sell is. Okay. Let's go to home prices tick up as supply ticks down. Haley, if you could, median sale price year over year change. If we look at median sale price up 1.7%, it was price growth bottomed in May. It was 0.6% according to this Redfin report. The same month that active listings peaked. I think that's really important for sellers. Okay, so the same month, May, when we saw the most new listings come on the market, what happened? We had year-over-year price increase of only 0.6%. The smallest price increase was when everybody was listing their home. Okay? Some of the largest price increases of the year, what do you know? They happened in February and in March and in April and even in January, because the sellers who get on the market before everybody else decides to get on the market captures that bulky, chunky buyer demographic, which is out there early spring, late winter, looking for their homes. I'd be showing this one-on-one to sellers who are saying, we're thinking about listing in May because we think we're going to get the most money for that. This is what I'd be pulling up from school. BAMX members, you can grab that in the hot sheet classroom as you can each and every single day. All right. Haley, we're gonna bump the down payment conversation to tomorrow. I do have a down payment report. It's from realtor.com. I'll be closing out my final day with the realtor.com executive team and their partners that are here in Park City tomorrow. So I think it's only fitting. Let's bump the realtor.com report on down payments to tomorrow. I've got to jump in and before my meetings start here today, jump in and record a new real word. There will be a new real word up on the YouTube channel here on the Now BAM YouTube channel. Make sure you subscribe too, so you don't miss those updates. There'll be a new one up later today talking about the CoStar and Zillow spat of the week, the Matterport conversation that was kind of breaking around yesterday. Mentioned the 10-year lowest year-to-date level. We had a 30-year fix yesterday that dropped down to 6.22. 6.22 is the lowest we've seen since we hit that year-to-date low right before last Fed meeting. We have a Fed meeting next week. CME Group says 99.9% chance that we'll have a cut. All right. Real word later today. I'll see you guys back here tomorrow on the hot sheet. We'll break down this realtor.com report and more. Until then, have a great day. And of course, toodaloo.